Okay, welcome to the NZ Everyday Investor. I'm Darcy Ongaro. I'm sitting with Di Papadopoulos.
Good morning.
Good morning. Thanks for coming into the studio today, Di. And I know that you were up here recently from Wellington, where you're based, and spoke to one of you guys at Booster, which is where you work, and specifically about what Booster does, but also around this thing called the PLPF, and we'll come to that in a minute, because that's pretty cool. But why don't you just start by telling us a little bit about what you do at Booster?
Sure thing. So at Booster, I guess what we are trying to do is to help Kiwis get on the front foot financially.
Yeah.
And so my role at Booster is making sure that we've got the things in place that help people to do that.
Okay.
So it's really about making sure that the right solutions and the right help is there when you're looking at anything financial.
Fantastic. Seems pretty simple, right?
Yeah.
And most of us in New Zealand, we understand how KiwiSaver works. We know what that is. A lot of us have signed up to KiwiSaver, and whether we knew it or not, that was possibly for a lot of Kiwis the first time that we've experimented with shares and gained exposure in that space. But that is really just the gateway drug. And beyond that, there's so much more to actually unpackage. And I don't want to make this episode about Booster so much, but do you want to just tell us a little bit about the different bits that Booster does?
Yeah, sure thing. So I guess that was the great thing about KiwiSaver is that it took investing from something that only rich people did to something that everybody could now do. At Booster, we've been around for 22 years, so we have a lot of experience in pretty much everything financial. Yeah. So yes, we do KiwiSaver funds, but we also do investment funds that are just standard investment funds. They're not locked up till you're 65, like KiwiSaver. Yeah. And then we also have some insurance options as well.
Got it. And there's also a, what's it called? Is it Tahi?
Tahi, yes.
Tahi. Do you want to tell me really briefly about that?
Yeah, sure thing. So Tahi is our specialist investment fund. What we could see in the New Zealand market was there's a huge amount of really successful small and medium businesses. Yeah. They really want to grow, but to get growth capital, they often have to go offshore, which means they lose control of the business most times. We could see a really great opportunity to marry up New Zealand investors with those opportunities, keep the profits in New Zealand, keep the talent in New Zealand, and importantly, keep those people in control of their businesses because they're so passionate about it. So it was a real win-win, and so we set that up a couple of years ago, and it's just been going from strength to strength.
So it's kind of like a private equity fund or a VC fund or something like that?
So I guess the closest thing you could compare it to would be a private equity fund, but it operates quite differently in terms of how it's structured to make sure that, I guess everyone has a mutual vested interest.
Got it. And we had Robbie Paul and Sam Stubbs on the podcast maybe 2 or 3 months ago, and we talked about how there's a bit of a tie-up between them to do something kind of similar-ish. But the whole spirit of it is, hey, if we're enrolled in KiwiSaver, wouldn't it be cool if some of our funds were actually going into homegrown native businesses that were likely to succeed, but we're actually supporting New Zealand businesses so they don't go offshore and we don't lose them. It kind of makes sense. It's KiwiSaver, right?
Absolutely. Yeah. So, KiwiSaver is amassing a huge amount of money. And it would be great to see more and more of that being used to support New Zealand businesses and then equally to have the benefits coming back to those Kiwi investors.
It makes sense.
It totally does.
It's a no-brainer. So now today, because we're kind of loosely skirting around property, but we're not directly talking about property. I'm going to probably get into this a little bit more next year. Yep. But we're skirting around other, not an alternative, but other ancillary ways where one can partake in the benefits of owning property without directly owning property. Mm-hmm. Private land and property fund, go. Tell me what it's all about.
Okay, so I guess simply put, all it is a portfolio of land and property, which we've put together, and we've then made it really easy for anyone to invest in it.
You guys directly own these assets, you pull it all up, and then you sell units to investors?
Exactly right. And so I guess that's the biggest challenge for people that are wanting to invest in property. If you want to diversify, it's quite difficult, right? It's because most of us don't have the capacity to invest in 100 investment properties. Yeah. So the typical Kiwi thing to do is to buy 1 or 2 investment properties. Now, we're not saying that that's not a good thing. Myself, I have investment properties. Kiwis have a long love affair with property, and for good reason. But what we're seeing is that more and more people are being locked out of the property market, so it's just not a realistic option for them.
Yeah.
Or they're choosing not to get involved because, being a landlord maybe is a bit of a hassle, and everything that goes with it.
Yes.
What the Private Land and Property Fund does is it looks across a broad range of properties. We have a team of people that go out there and look for opportunities to buy properties that generate income.
Okay.
Then we put that together in a big portfolio, and then people can, like you say, buy units, which means they own a share of every single one of those properties in the portfolio.
Okay. And at the moment, how many actual properties are in the fund right now?
Yeah, so there's multiple properties in the fund at the moment. We've got properties as far north as Kerikeri. We've got some in the Hawke's Bay and throughout the wider Marlborough region.
Right. So these are properties that produce income, not necessarily residential.
No. So
you're
at the
staying away
moment,
from residential?
yeah. So the fund focuses on agricultural and horticultural property primarily at the moment.
Okay.
So at the moment there's vineyards, kiwi fruit orchards, and other properties in the fund, and that will grow over time.
Okay. So if I was a vineyard owner in Marlborough, and I'm keen to kind of keep on doing my thing, but I need to release some equity, potentially a lot of these farmers would be selling the land but keep the business going, and that's the proposition for them, right? Is that how that works?
Yeah, you're right. So often we will find, and this is quite common, that you have got a company that is really great at growing a particular crop, but they don't necessarily want all their money tied up in the land that it grows on.
Makes sense.
So oftentimes we will find that what happens is they want to sell the land, we buy that land, but they continue on growing. They take a lease on that land, and so they pay rent to be there, and that is what is then returned to the investors.
Makes sense, doesn't it?
It does.
Because especially as time goes on, the land value starts to far exceed the value of their business operation in some cases, and they need to actually unlock some of that equity because they have other things to do. Maybe they want to give it to their kids to help them buy a home in Auckland, or they just need to go on a holiday or reduce debt or whatever, right? But this is a great way for them to continue to do what they want to do, and ultimately they could probably buy units in the fund and now have a diversified set of land holdings through the fund rather than own the land that their business is operating on anyway, right?
Yeah, absolutely.
It's pretty cool because you could actually really think outside the box here, couldn't you?
You can indeed. And I guess what it does is it lets people focus on what is their core business and what they're good at. And then, they can get on with doing that without having money tied up in the wrong places, whereas others who have got money that they want to invest and it makes sense for them to have it in land can do so.
Okay, that's pretty cool. And are there other funds that do it like this? Like I know that there's listed property funds and they usually target industrial and commercial and retail and all that sort of stuff. But this isn't, this is listed, isn't it? So tell me about that.
So the fund is listed, yes. So the property itself is not listed. Right. So these are private investments which are held on private titles.
Yeah.
However, we have listed the fund on the New Zealand Stock Exchange, and all that does is give people another option in terms of how they enter and exit the fund.
Sure. So instead of going directly via Booster to buy units in the fund, they can actually just go and buy shares directly on the NZX.
That's right.
Buy and sell whatever they want.
Yeah. So you might have somebody who has got some units that they hold in the fund which they're wanting to sell.
Yes.
They might choose to do that on the stock exchange, and therefore you can buy there. Or if you'd prefer, you can do that directly with the fund. Okay.
So I have a unit in this fund, and I don't directly own that title. My name does not appear on the title of all these properties, obviously. So presumably there's some sort of custodial arrangement. Do you want to just talk me through how that works?
Yeah, sure thing. And that's a really good question because it does come up a lot.
Does it? Okay.
So how it works is Booster is the manager of the fund. So as the manager of the fund, Booster goes out and enters into contracts to buy property.
Okay.
That's held in beneficial ownership for the people who hold units in the fund.
Sure. So kind of like a trust, right? You're the beneficial owner, but the trustees in this case would be would be Booster,
And
right?
so
Or
so Booster then manages and looks after
Yeah.
those investments on your behalf.
Yes.
But the investor ultimately is the beneficial
is the
owner.
beneficial owner. And the dividends, presumably, because like you mentioned before, there's income. These are income generating properties. So the dividends, do they get distributed, or are they really just kind of reinvested somehow? Does it pool up? How does that work?
So what happens is so we call it a distribution. And so at the moment, once a year, that distribution is paid. So the income that the fund generates builds up in the fund.
Okay.
And once a year, that's paid out as a distribution to investors.
Is it? Okay.
Yeah.
And so, and long term, what's the strategy here? Is the strategy just to keep on buying properties of a similar type, or set up new funds in different sort of sectors? Like this is obviously agricultural and horticultural, but will there be other funds that start, getting into the commercial and the industrial stuff?
So we would like to see this fund grow significantly from where it is. So rather than setting up other funds, we will see more properties coming into the fund.
Yeah.
And for example, warehousing is something where we see some opportunities. So that might be the next move. But you'll start to see more diversity of the kind of properties sitting within the fund.
Cool. Obviously, creativity and traditional financial systems, how things have always worked, those two things sometimes don't gel too well, but it seems like we're getting into a place now where true innovation is being expressed in new financial products, and it's really cool to see. So with this PLPF, how did it come about? Who created it? How did it come about?
Oh, that's a great question. So I guess the genus or where this came from is we have, been working in this space for a really long time. And over that time, we have seen the challenges that real people out there face.
Sure.
And there's two key challenges that we kept seeing time and time again. So one was people having money sitting, say, in term deposits, heading towards those retirement years, and struggling with low interest rates because you need income. And you might have saved a really significant nest egg, but if you haven't got income, that's a real problem.
Equity rich, cash poor. Yeah.
Exactly. At the other end of the scale, at the very same time, we've got a generation of people coming through who are finding it really hard to get into the property market because property prices are climbing and climbing and climbing. We see this a lot with KiwiSaver, people wanting to take money out to buy their first home, yet the market's getting away on them before they can, even get an offer in sometimes. So we looked at that and thought, well, given our knowledge and our experience in this space, what can we do that provides actually a real solution? And that's where the Private Land and Property Fund came from.
Okay.
We looked at that and thought, well, here's an opportunity to give people who might have otherwise had a lot of money sitting in term deposits an alternative, not necessarily for all of that money, but to be able to put a portion of that money into something else that generates a better return, but still gives them easy access because they can draw down whenever they like.
Yes.
And a regular income flow off it as well.
Right.
At the other end of the scale, for those people that were struggling to get into the property market at all, what it did was really reduce the level of money that you needed to even get started. So with $1,000, you can get started in this fund.
So those who are locked out of the property market, or those who want to receive the benefits of owning property, lowers that barrier of entry to $1,000, like you say. It's way more liquid. So those with high earnings or surplus income to invest, they could trade that for something that's hopefully going to grow in value. And on the other end of the spectrum, you have those that need cash. They have the opposite problem. They've got the equity and they want, they want to draw an income. So it's kind of indirectly marrying those two groups together. It's solving two problems in one.
Absolutely. And, I guess what we try to do at Booster is think about, well, what are the real challenges that people have got out there and what opportunities can we see that will help to solve those? And for us, this has been one that has proved extremely popular because as soon as we went out there and said, hey, this is what we've got.
It was gobbled up pretty quick.
Yeah.
Yeah. And so as a result, there's more money flowing in, and now I guess there's probably more of a push to get more and more properties, right? Because there's more money there to actually buy more properties. And
that's right. And so that's exactly what will happen. As more money flows into the fund, more properties will enter the fund.
Right.
Yeah, there's no shortage of property opportunities out there, that's for sure.
And is it too early to kind of give away any ideas of what kind of returns are realistic?
No, not at all. So we have a target return rate. So the target annual return after all fees is 8% per annum on average.
Okay.
For the last 2 years, the fund has performed well above that, so we've been pleasantly surprised by that. But yeah, the target is that 8% on average.
And the returns are primarily coming from, I guess it's just coming from like the businesses that are on these parcels of land are generating income, and they're entering into a lease agreement.
Yeah, so the income
owner, right?
comes in two ways. So either it's because there is somebody that is renting that land from us, so they've entered into usually a long-term lease, say 10 years or so, and then they pay rent.
Okay.
Alternatively, we might be growing crops on that land and then selling those crops.
Really?
And we have some grape supply contracts, so we've purchased some vineyards, and those grapes are sold to a wine company that produces wine.
Wow. Okay. So here's like a fund that's making wine. That's pretty cool. So what are some of the other, I guess, pleasant surprises that you've seen around doing this then?
I guess the thing that's been really nice for us is when we began this, we knew that one of the key things for people was they did not want their money tied up so that they couldn't get to it. Okay. So we thought, long and hard about, how do we do that? Because, property is known for being not particularly liquid.
Correct.
Myself, I've got a rental property. Should I want to go on holiday, I can't exactly just easily draw down some money out of the...
Because the liquidity is determined by the lender, not by you. Yeah.
Absolutely. Yeah. So what we were trying to do when we set this fund up was give people easy access to their money.
Yes.
And so what they can do is they can put their money into the fund, but we have a monthly drawdown, so they can literally set up a regular withdrawal if they want.
Is that right?
And draw money down on a regular basis.
So it's actually a really good solution for the whole decumulation sort of problem that we have.
Absolutely.
Cool.
And, that was very much front of mind for us when we were designing this.
Okay, that's pretty cool. So the liquidity thing, the regular income, you've built the mechanics so that it could actually help or be a part of something that could help fund somebody's retirement.
Yeah, correct.
Okay. And is there any leverage used? Like, is there any debt that's actually held to make this more exciting, more spicy?
Yeah, so what the fund does is it invests the investor's money, but equally at times it will also draw on funding. So like you say, lending to allow it to purchase more properties, which the investors then also get a share in.
And is there any sort of like ratio that you're not going to go above?
Yeah, so we have levels which we set it to make sure that the fund is always within.
Gotcha. Yeah. So I'm just thinking, like myself, I would look, like if I was retired, I'd be thinking, I want to make sure that my income that I'm going to be drawing down from whatever it is fairly certain. And traditionally, I suspect people have really relied on the whole term deposit situation and just living off the interest back in the days when that was actually possible. Going forward, that's not so much possible, so we have to kind of be open with the idea of taking more risk in retirement than what we otherwise would have to actually get a return. But there's some challenges there. So where does this fund kind of sit in terms of that spectrum of being really safe and really risky? Because volatility, you don't really want to be dealing with that in your retirement, right?
Absolutely. And I think you've raised a really good point there is, people are living a lot longer in retirement. And so while in the past it probably, was the done thing to put the nest egg into term deposits, with people living much longer in retirement, that's actually not, realistic anymore, is it? That's money that, needs to last many people for 30 plus years.
That's right.
And so for us, this was the solution that meant you didn't have to move too far up the risk curve. You didn't need to take on a whole lot more volatility.
Right.
But, hopefully what we can achieve for you is some far superior returns.
And I guess to a certain extent, the reason why you would go towards property is the same reason why you could consider this type of fund, right? Yeah. But I guess the difference is that it's not your home. It's not an investment property. It is in a different sector of property. It's in horticulture and agricultural stuff, and that's got a different dynamic. So I suspect the risk profile is very different for that type of property than it would be commercial, industrial, retail, or residential, right?
That's right. Yeah. And that's why we see this as a really nice complementary investment to what most New Zealanders already hold.
Awesome. That's good. Good answer, Di. Cool. So Di, just moving on to a different sort of angle now here. I know that like any financial services firm, you have this direct offering where people can often approach you directly and just be self-directed and pick from the menu and go from there. But also you deal with financial advisors. And I am kind of curious just to know how it works with financial advisors in that, how do they use Booster currently? Like, where does Booster fit in terms of providing a solution for financial advisor clients?
Yeah, sure thing. It's a really good question. I guess what KiwiSaver did for New Zealand, which was great, was investing up to a much wider range of people who in the past didn't invest.
Sure.
What it's also done is increase the number of people that need good quality financial advice. Now, there aren't that many financial advisors in New Zealand yet that can actually serve every single one of those people out there that needs financial advice. However, we do believe that the best thing for anyone is to get that really good, high quality financial advice. And so what we do is we will work with financial advisors across the country. We believe that it's really important that those financial advisors maintain their independence.
Okay.
So if financial advisors recommend our products, then we'll support them with all of the kind of information and reporting that they might need to do to help to work with you as a client. And that's how we make sure that they're well supported.
So I was talking to a financial advisor before I came in today about you guys, just to kind of make sure that you weren't this dodgy sort of outfit in Wellington. You're all a bunch of snakes down there, right? So I had to make sure it was okay, right? But he was just saying, he uses you guys, and the first thing he said was he really loved the I guess the accessibility of client information, so that when he was doing reviews, he had access to everything that he needed to have access, and it was just so easy to use. And he said compared to some of the other providers that he uses, he really loved the Booster offering because it just made him look good when he sat down in front of his clients to review their needs. And that's often, I guess, something that people often miss when they think about how financial advisors work. Oh, they're just placing business and then they walk away, or they're placing business there whatever they're doing just to get the most amount of money. But sometimes the other selfish motivation is they place business in places where it's actually easy to serve customers better, which might sound weird, but that's actually a really high up there in terms of consideration. And you've made it easy for advisors to do their job well. That's what I can understand.
Yep.
But how does it work on the fee basis? How are financial advisors remunerated if they recommend Booster products?
Yeah, so if you are working with a financial advisor and then they recommend a Booster product, then we will pay the advisor a small fee for them to continue to provide advice.
Okay.
So what that does is that means that at any minute that you might want to ring up and say, oh no, I'm really worried about what's going on with my KiwiSaver now, or my situation has changed. Yep. That means that advisor is always there, available and on call for you.
Got it. And they're actually not going to begrudge you calling them and taking their time away from their, it's not like, stop, just leave me alone. I set this up and I want to walk away from it. It's actually, that's what they get paid to do.
Yeah, that's right. I guess the key thing to remember is that, financial advisors are there to help you for the long term.
Yeah.
And so what we would love to see is people out there establishing long-term relationships with an advisor who has got the availability and the capacity to be there for them to help when they get to those decision points.
Which is interesting, right? Because I'm just thinking about this from a product manufacturer's point of view, right? Mm-hmm. You're happy to receive all these clients via financial advisors, but you know that those financial advisors could also recommend other providers out there. Mm-hmm. And the fact that Booster would support the financial advisor community is interesting, because it means that, I guess, to a certain extent, you have to actually provide the goods, because if you don't, that advisor could just take them somewhere else, because they're not going to recommend a rubbish product.
Yeah, and we are very, very aware at the end of the day, there will be times where a client will have a very particular need and we won't necessarily have a product that meets that need. And so the right thing in that situation is not to put that client's money into our products. It's to put them in the most sensible place. And that's why we think that independence is really important. We will do our best to make sure we've got a great range of solutions.
Right.
But we're not silly enough to think that in every single case we can be the be all and end all. So we actually want the end client, the customer out there, to end up with the right structure around all of their investments, all of their finances. And so we think it's really important that there's a really high quality financial advisor force out there in New Zealand who can do that.
And what do you think about that? Like, because I know, I'm part of that community, and I know that it kind of feels like sometimes there's like a double-barreled shotgun facing us right now, in the form of regulation and the threat to technology. I think it's actually an opportunity, but the threat coming from technology over there and then the regulators over here, it feels almost like there's a lot of pressure on the advisor workforce to actually shrink, not grow. And that would be concerning, not just from my perspective, but I guess for a lot of New Zealanders who could benefit from financial advice. How do you see this playing out going forward? Do you think that the technology will more than offset the impacts, like the efficiencies that we gain? How do you see this playing out?
Financial advisors that deal with Booster have probably seen over the last couple of years is that we have spent a lot of time looking at, what are some of the technology solutions out there, but not just from the point of view of what is a technology solution. What we're looking at is, what are the real needs of the client, and where does the financial advisor add the most value? So, for example, recently we launched a budgeting tool. So what it allows somebody to do is, if they are a Booster member, they log on to onto our website. They can link all of their bank accounts up, and they can have a look at where they're actually spending their money.
So what does it do? Bank feeds?
Yeah, bank feeds, exactly.
Wow, really?
Yep.
Okay.
So you can see automatically where all of your money is being spent. So it categorizes it. So you'll see, I'm spending this much on food, I'm spending this much on fuel, utilities, etc. And what that helps you to do is really quickly understand where your greatest opportunities to save more are.
Cool.
On top of that, you can then set some goals around, I'm saving for this, or I want to spend less on this.
Correct.
Okay, so those kinds of tools allow people to control their day-to-day budget, but then it also helps them to work with their financial advisor, because then they've got a really clear picture of where they stand and where their opportunities are. So from our point of view, actually helping people to get on top of their own finances and then use their financial advisor's time really well to actually chase after the big opportunities is where we think the future lies. Because
the advisor increasingly going forward will probably be the creative influence rather than the administrative power.
Yeah, that's right. That's where I think financial advisors can add the most value.
Totally,
it's actually
totally
saying, here's your big picture. Have you thought about this?
Just take me through KiwiSaver a bit again, because I know that you guys have been around for a while, like you say, 20 odd years you've been around. And with the KiwiSaver stuff, how do you guys feel about your performance with KiwiSaver? Do you feel like, based on the fees that you charge and the performance that you get, like your net return after fees, which is the only thing to focus on, is that, like, do you guys feel pretty proud about that? To be honest, I haven't looked at any of that, so I'm not saying that because I know anything. But how do you guys rank? You pretty good?
Yeah. So I guess what we like to look at is the overall value. So there's no question that your performance needs to be good, and your fees need to be right. On top of that, we think that you need to be getting good advice built in as well. And that also you need to be getting a range of other value adds on top of it. So, for example, things that we do, we include free accidental death cover.
That's right, up to $50,000 I saw.
Yeah, that's right.
Cool.
Also, as a Booster member, you get access to a whole lot of other tools. I've mentioned we've got a budgeting tool, for example. So we think all of that bigger picture is really important. The other thing that we're doing, which we think is a little bit unique in the industry, but we think will be increasingly important moving forward, is looking at what we're actually investing in. And so we do things like our Tahi Fund, which invests back into New Zealand businesses.
Yes.
That has been really important to a lot of our clients who actually want their money and their savings being funneled back into New Zealand investments.
Yeah.
The other thing we do is the New Zealand Innovation Booster. And what that invests into is technologies coming out of Victoria University. They're really interesting and different opportunities that most everyday people would never have the opportunity to invest in.
Right, okay.
But for most of our KiwiSaver funds, they invest into that as well.
Is that right? Okay.
Yeah, and so what we're doing is really, I guess, trying to help people to feel far more engaged in what their KiwiSaver accounts are doing and giving them opportunity to invest in things that your plain vanilla scheme out there maybe wouldn't let them do.
That's really cool. That's cool. I like that. And I like the whole kind of, it just really increases the spiciness level, it makes you feel like, what you're doing is making a difference. It's encouraging innovation, and it's homegrown. And maybe for some people that's actually what they need to see before they're motivated to look at their KiwiSaver a little bit more closely, right? Like maybe one of the reasons why people aren't into KiwiSaver as much as they should be, especially self-employed people, is because they don't realize how interesting it can actually be.
Yeah, that's right. And I think the industry struggled for a long time with not having great transparency around what people were even investing in.
Right.
I think there's been some big leaps forward in that respect.
Right.
But like to your very point, if you then look at a big sheet of paper that has a whole lot of names that you either don't recognise or they're just the standard ones that you see every day, it does get a little bit boring.
Yeah.
For us, the great thing is that we can show people behind the scenes and let them see what they're actually investing in.
Got it.
Recently, we had member days where our investors actually got to come along and visit some of the places that they're invested in.
Okay.
And so for us, that's a really important way of helping people to better understand not just their KiwiSaver accounts, but effectively the cycle and how investing back into New Zealand has a positive impact in those communities where the money is actually invested.
Cool.
And then that flows back ultimately in the form of returns to investors.
Yeah. Financial and non-financial, from what I
Correct.
can see. And active or passive, how would you guys describe your investment style?
Oh, that's a great question, that one.
Let's just relish in the fact that I asked a great question.
So there is often a active-passive debate in the industry. Personally, I find that one a little bit challenging because I think for a lot of everyday people on the street, they've never necessarily come across the terms active and passive. So I like to try and break it down a little bit more into,
I prefer to use like active aggressive people and passive aggressive people, right? Like surely it's the same thing, right?
Exactly. So, at the end of the day, the two get bandied around as two extremes that ultimately fight against each other.
Yeah.
What we would say is that actually what we are trying to do is something quite different to that.
Actually, and before you say that, just for the benefit of our listeners who may have only just encountered that phrase, active and passive, are you able just to really quickly sum up the difference between the two?
Yeah, sure thing. Yeah. So at a really basic sense, passive investing would be to effectively just invest to reflect what is available in the market, and then you will just move with the market. And it's based on the theory that smart people can't beat the market average.
All boats rise on an incoming tide, so don't try and outthink it.
Exactly.
Okay.
At the other end of the spectrum, you have a active approach, which says we can beat that market and we can get better returns than you would just by rising and falling with the market. What we think is that things like our Tahi fund, where you are investing directly, so you're actually not even investing in the listed market anymore, is where you actually really will find opportunities to add value because it's a different asset class.
Gotcha. So on that basis, what you're saying is that you guys would have an active management style, and as a result, then it's based on the strategy that you employ. And this kind of leads back to another question that I forgot before, but I've just remembered. If I had my KiwiSaver with you guys, with Booster, how do I know that there's some skin in the game? There's like an alignment of interests.
So at Booster, we're owned by our senior management team.
Okay.
So we've got a really long-term outlook on this.
Yeah.
We have sat down as a team and talked about, well, what is it that we want for this business? And we want this to be intergenerational. So we're really here for the long haul. So every single one of us has our money invested in the company and in our KiwiSaver scheme. So it's very much in our interest as much as our investors.
Gotcha. So if you totally cock this up, you're hurting way more than we would, right?
That's right, absolutely.
Yeah,
and I guess where we come from is, the business has been around for 22 years. So we've seen the ups and downs that come with this, and we'd like to think that we've also learnt a lot along the way about what success looks like.
Yeah.
And it boils down to some pretty simple things, and ultimately it's about putting the customer first. And if you do right by the customer and look after their interests, then you're going to be around for a lot longer, and that's what we want to do.
And it's that whole long-term view as well, right? Like I think in the past in New Zealand especially, you just say the word finance company and then it's like, or blue chip and all these connotations of people that are thinking very short term. How can we kind of just rape and pillage everybody as fast as we can and bugger off overseas before they catch us?
Yeah.
And that was a really, really unfortunate period that we went through. But now there's a much more of a mature sense of people that are working in this space. And just like the players who are offering solutions for the investors likewise need to take a very long-term balanced view. And hey, this is a marathon. This isn't a sprint. We're not about trying to sort of chase the highest return. It's about allocation and sitting in for the long term, right?
Yeah, it was a really awful thing that there were a lot of people that did get burnt.
Yeah.
And I guess that's why, we would say, just like anyone else, be very careful of promises that just seem too good to be true.
Yeah.
Because at the end of the day, investing is a long-term game.
Yeah.
So you need to be working with people who have a track record and who you feel confident will be there for the long run.
Yeah, that's cool. So, Di, now for our listeners, just so our listeners understand who you are, because I know you I don't even know you at all. I've only just met you, right? So I met you outside in the car park, for heaven's sake. So, so for our listeners, tell us what you're into. Like, if you didn't have to go to work today, if you didn't have to work for the rest of your life, what would you do right now with your time? What would you be into?
So if I didn't have to go to work today, the funny thing is I would probably still come in, because I guess what I found when I joined Booster was a home. So my passion has...
You weren't homeless, were you? You were living in your car, weren't you? It's like, oh, sweet, these guys will take me in.
Thankfully not. Yeah. So I guess my passion has always been about, financial nous. So on a personal level, I've always really struggled with this idea that there's so many people out there who are just living paycheck to paycheck and really struggling with, just day-to-day finances getting on top of them.
Right.
And so for me, what I've found is that this is a really great place where we can make a real difference in people's lives, whether that's helping with the weekly budget or actually saving for the long term.
Gotcha. Yeah.
So that's why I keep coming in every day.
That's why you keep coming in, because they pay you nothing. It's like, hey, you can sleep underneath the desk. That's sweet. But you're into it, and I guess to a certain extent, I totally resonate with that. Like, if I didn't have to go to work, I'd be probably doing more of this, to be honest. I'd be trying to, because I think there's something in the empowerment that you can deliver in people's lives if you can just help them to gain a better picture of their resource, their time and their money. And if you can do that, you can affect so much positive change, right? So if it wasn't at Booster where you're expressing yourself in this way, like if you were retired, let's say, and you had all the resource that you would ever need for yourself, for your family, what would you stand for? What would you be into?
So I guess from personal experience, and it's now playing out, I think, in what we see across New Zealand with financial capability and literacy rates, is that as a culture, we are not all that comfortable talking about money and helping people to understand how to generate wealth.
Right.
And generate wealth doesn't mean be wealthy, be rich. What I'm talking about is getting yourself into a position where you are comfortable and you can withstand the odd bill that, pops up when you weren't expecting it. And I think that if I could spend my time on anything, it would actually be around helping in those early stages with our children and helping to put initiatives in place and meaningful things that actually really move the dial there.
That's
There's
awesome.
some great work out there being done already, but it does need so many more people and so many more organisations to get on board and help with that.
Yeah, because awesome. That's really cool. And there's a lot of organizations doing amazing things in this space, but it's like, I think it's going to take almost like an uprising, right? Almost like everyday people saying, yep, I'm going to stick my hand up and I'm going to go talk to the kids at my kids' school about money.
Yeah.
Teach them what it means. Teach them actually how to segment off your income that you earn every week and think about saving, giving, investing, spending. How do we do that, right? And like that's a big problem, but it's really easy if we all have a crack at it.
That's right.
I think people like sitting in my chair need to be doing that for free. Like do stuff like this.
Yeah.
We need to be doing this better because if we talk about it more, you'll talk about it more, people will talk about it more, and then the problem will be solved. But why don't we teach money in schools? It's crazy, isn't it?
I know. And, I've noticed this recently. So the irony of being a parent, right, is you have all these amazing intentions.
Yeah.
And you think that because you've spent all this time and effort trying to teach your kids something, that they'll naturally just be good
That's
at that,
right. They'll just get it, right? Yeah, of course.
And of course, that's never what happens. And so I found that myself. I've always been, very disciplined with money, and I thought that would have just rubbed off on the kids. Yeah. And sure enough, we started giving them pocket money and knocked me down with a feather. They're just blowing it all the minute it ends up in their hot little hand.
Right, yeah.
And, so for me, that was a big eye-opener about, it takes a village, right?
Yeah.
And just me setting a good example in the home doesn't necessarily make that happen immediately. So
That's right.
It's about finding all of those various ways that we can help kids to learn about it.
Well, let's go there. So tell me about that. How old are your kids?
So they're 5, 7, and 9.
5, 7, and 9. Mm-hmm. 5, 7, almost the same as me. So, okay, so I know a little bit about what your world might look like now. Yep. My condolences. But I know it's pretty cool. But what have you done practically to help teach them money management at home?
So if you go onto the Booster website, you'll be able to read more about this on our blog.
Cool.
Because I have recently shared our experience, but I'll give you a quick rundown of it.
Yeah.
Because in our household, I am the financial controller because that's kind of my natural skill set, whereas my husband's happy to kind of relegate that duty to me.
Yeah.
When the kids showed that they weren't actually all that great with their pocket money, I was pulling my hair out. And it was actually my husband who came up with what turned out to be a really, really great lesson for them. So he sat down with our eldest and said, I will give you $50 if you save your pocket money for a whole year. And I thought, well, that's absolutely rubbish. There's no way he's ever going to do that. But what he did was he broke it down for him into, these weekly milestones. $50 seems like a huge amount of money for, at the time, he was maybe just about 6.
Right.
A year later, he had actually managed to save for a year.
The whole thing. Wow.
So he'd got $1 a week,
Yeah.
so he had $52.
Yeah.
He'd got the $50 from the money that my husband had offered up.
Yeah.
And at that point in time, he's standing there with $100
Yeah.
and feeling really, really proud of him and of himself. And what we've seen is that's now really cemented a savings habit with him.
Interesting.
And so now his default is to save.
Yeah.
We're now going through it with our middle child. And so he's partway through his year of saving, and he asked for the challenge to be implemented for him. So we did that. So it'll be interesting to see how it goes.
Lesson. That's a really good way of demonstrating, I guess, self-control, financial self-control, right?
And also what it managed to, I think, bring to their attention, and, this is a really big concept for a kid, but that delaying gratification is actually a really good thing. And often when you delay that gratification, you'll find that the want for that toy or whatever it might be has fizzled out.
Yeah.
And I think that's what our eldest now really understands, which is I really feel like I want something right now, but if I just wait, then I'll make a far better decision about this money.
That's cool.
So yeah.
That's really awesome, eh? And it's kind of like, it's a picture of what KiwiSaver is, right? You just put a little bit aside and then, the government gives you money.
Tops it up.
That's cool. So, no, that's really awesome. Well, thanks for sharing that. It kind of tells us a little bit about who you are, because it's really easy to think that what we do is what we do, and then who we are is who we are, but the two are very separate things. And for some people, that's absolutely true. But I think that there's a lot of power when you're doing something that's really congruent with who you are, and that seems to be the case with you. So, well done.
Thank you. Yeah, it's lovely to get up each day and come somewhere that it might be work, but it's what you want to do. And
you do it anyway.
Doesn't feel like it.
That's right. So, Di, before I let you go, is there anything that you'd like to sort of say to our listeners? Any kind of like last minute, really nuggets of wisdom that you want to impart people with?
I think it is just get involved. It is really easy to put this stuff off.
Sure.
Finances can seem a little bit boring or a little bit hard, but the sooner you start and the sooner you get a great plan in place, the sooner you do anything, the better the results will be over the long term. So, it's never too late.
Right.
Just get on top of it
Well
today.
done. So I guess if there was a challenge that we could put out there for those who either don't have KiwiSaver or they do have KiwiSaver, but they're looking for the next step, do I do more on KiwiSaver, just contribute more, or do I do something else? What would be the challenge for them?
So my challenge to you would be have a look at what you've got, and then look out there. There's some great tools that will help you to decide what to do, whether that's sitting down with a financial advisor or whether that's using some of the great tools that are available online. Just get in there today, do it today, and you'll feel better for it.
Fantastic. Do it today, don't delay. Thank you, Di Papadopoulos, for coming in. I love saying that last name, Papadopoulos. You must as well, right? Do you just say it sometimes when you're on your way to work?
Oh, yeah,
Papadopoulos, yeah.
Spell it out loud.
That's right. Sweet. Well, thank you for coming in today. And if people want to find you or learn more about what Booster is and what they're up to, just www.booster.co.nz.
Absolutely. Or feel free to give us a call. We've got people on the phones that if all you want to do is have a chat, we can do that.
Fantastic. Awesome. Thanks, Di.
Thank you.
Cheers.